I am on YouTube. Haha, they posted that? We do the disclosure. I'm not really supposed to talk about anything else. But I gotta wait till 4:10 anyway. Somehow on here slightly early. Yeah, well, Z saying we have good compliance people, and that is very true. But we also have people like me who really make sure to be compliant. It's I've definitely learned over the years that it is a good practice to keep compliance on your good side by following the rules. So with that said, actually, if someone could post the YouTube link, I'll just get started. Should be on Derrick the Trader. There we go. Thank you, Robert. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here's the position disclosure. We added on Oxy. And let's do it. So they posted that little. I kind of did that as a joke. I didn't know they were gonna post it. That little YouTube video with me and the puppies, or it wasn't meant to be a YouTube video. I gotta look now. They did.
Derrick the Trader here.
Where's my
we had a
share?
heck
Posted
of a
this
bull
thing.
market rally today. Almost a
One of these shorts.
puppy.
Yeah, this is one of the puppies. I was telling you
joke,
guys the
isn't
other day. Ah, there he is. So cute. Freddy the puppy. He can't even open his eyes yet. I love it.
Open his eyes yet.
I love it out here, man. I think I said it the other day. I'm sure it's some sort of mix. If you ask my neighbor who owns the mother, and we're not sure who the father is, he would call it a farm dog. I was just babysitting. I couldn't keep a dog in the city. It would be cruel. I'm gone for too long, and the apartment's too small. Otherwise, I'd want to keep them. The neighbor was over there, and just in the hay barn there, dug into the hay, was a little nest. And I'm standing there, and he's just reaching in, and he just grabs a puppy, puts it in my hand, grabs a puppy, put it in my hand, grabs a puppy, he keeps going, oh, this one's a boy, hold this. This one's a girl, hold this. Next thing I know, I got 5 puppies in my hands, and he's got like a couple in his hands, and I was like, all right, I don't want to tell Kirsten because she wasn't with me. We'll bring one over at some point and surprise her. So then last night he stopped by, and he had Freddy in his jacket. And he was like, come here. And he just reaches in, and just grabs it and puts it there. It was so cute. Can't even open his eyes yet. Probably like a week and a half old or something. Yeah, the good life. All right. All right, let's get into, let's talk about the stock market. Wow, so we got further follow through today. That's for sure. SPY's up 1%. It's one of those days where it actually felt like significantly more. SPY's are up 1%. Qs are up 1%. IWM is the relatively strong index today. We saw that right away too this morning, up 1.3%. So again, for people who participate in today's class, we talked about one of those layers of probability is relative strength, relative weakness. You'll hear me talking about that all the time, and it helps us to understand where the money rotation is going to understand where we want to be long. Yeah, going to the market here this morning. So we discussed, let's take a step back. We discussed how, technically after such a big 2-day move, the last 2 trading sessions combined is like a 4.4% move in the S&P. That is a Hey, Rowan, I can't read your comments and give this afternoon meeting at the same time. A 4.4% move in the S&P over the course of 2 days is a really, really large move. So after that type of move, technically what you would really want more than anything is consolidation. And that's what I was saying in the morning meeting. You know, if I was just going based on pure technicals, and this is why technicals are important, but those qualitative fundamentals as an add-on, and understanding market structure as an add-on is really important because it helps you understand your probability, again, to go back to today's class, of the technicals holding true. Because normally you would say it's a lower probability move to get continued upside today. But we know that the day after a Fed day is oftentimes a trend day. And the reason why behind that, like I explained earlier, is because, you know, as soon as the Fed announcement comes out at 2 o'clock and then, you know, the 2:30 press conference, the algorithms all go wild trying to digest the news as fast as possible. But the funds, they're going to take a minute. They're probably going to take the night. And they're going to digest the information and review and strategize and game plan and all that. And then the next day, after they've developed the game plan and what they should do based on that news, that's when they kind of will come in and position themselves, whether that's more shorts getting covered or whatever it is. So whereas we were honestly a little bit extended, especially from the ADMA, which, you know, you got the more unusual circumstance right now, which also goes to tell you this is a counter trend move, where the ADMA is below the 21 EMA, which is well below price action. That's a hallmark of a bearish market, right? We saw it here. The ADMA was never able to cross on any of these circumstances. It was never able to get back above. Here it's kind of trying a little bit to kind of give you that cross, which just gives you a little bit more kind of confirmation. So I understood that the day after a Fed day is oftentimes a trend day. We also understood that the market was a little bit extended even coming into today. We know our key levels, 420, 430, 440, and then really 457 or so, 460, that area on the upside are really important levels on the upside to pay attention to and the downside to pay attention to. And we got the trend day. I actually thought when this pullback was happening, which is about when I jumped off the radio to grab lunch and do a call before the 12 o'clock class today. I actually thought that this pullback was too much. And I know it wasn't unhealthy on the 15-minute chart. And I know that this is exactly when we get 15-minute pullbacks. And the Qs were even weaker. They pulled back even deeper. But the IWM was even stronger. The IWM just gave a time correction of that initial extension. But I was kind of thinking, to be honest with everybody, at this time of the day here, like, this pullback was probably a little bit too much. We're almost at the opening low. Like, yeah, I thought today could be a trend day, but I guess it'll probably just be, you know, a choppier range type trading session. And that just turned out to be the pivot low. It was just a 15-minute correction, which again is very normal for this time of day. And then that just led to just beautiful trend continuation throughout the rest of the day. And finally, to go back to one of my favorite exercises, bullish, bearish, neutral, we closed above 440 in the SPYs, which I know we have this one absolute peak here that goes to like 441. That was on like some news that came out that morning, and it totally faked me out. That turned out to like not really be true. So it was like a fake out to the upside, shook out some people, including myself, on the SPY short that I had, and then was a failed breakout that brought us to the downside. So, but technically, a close above 440 should put us back into that neutral territory. So again, bearish, neutral, bullish. We can almost kind of view that as like a scale that kind of goes back and forth. We said yesterday, as of yesterday's close, that we're still in the bearish part of the territory there, but we're like the arrow, like this is how I'm kind of imagining it in my brain, like that arrow is like borderlining into the neutral territory. Well, you can say with the close above 440 that we are in neutral territory for the S&P, but first of all, we want to confirm if that's also the truth with the other indices. We want to confirm if that's the truth with the other indices, and we also definitely need to take this with a little bit of a grain of salt. Because, yeah, we got to close above 440, but we are, like, massively extended into this 440. So I wouldn't be rushing to celebrate too much if you're a bull right now. And even in your best case scenario, we're really kind of just getting back into neutral territory, and we're extended. And this is all with an understanding of how market dynamics, where we have less liquidity. We understand that the sentiment and the positioning had gotten extremely bearish. So those tends to be the recipe to be able to get a really strong bear market rally. But I wouldn't be overly confident about this yet. We can start getting more confident if the S&P gets above 440 and the 8 EMA on the daily chart starts to catch up to that price. That's when I'll start feeling and taking a bit more of a deep, relaxing breath that bulls have regained some semblance of control. Otherwise, we are still overall in a bearish market. You know, look at these other rallies, right? Look how big these other rallies we had for this year so far. These gigantic bear market rallies. This can easily just be another one of those. And it could also be that thesis that we have discussed about a broader sideways year. Because, you know, you do have, as much as there is a lot of bearish things out there, and one of the things that Pat has spoken about very correctly is that the Fed is almost going to create a ceiling on this market. The Fed doesn't really want this market to be blasting off anymore like it did in 2020, 2021, where people feel like they got money coming out of their ears and they can go spend because it's just going to drive up inflation even further. So if this market starts really rallying too hard, it can potentially fast forward interest rate hikes even more, which could potentially, put a further damper onto the market. But the counter to that is, just for example, buybacks. Has everyone been paying attention this last earnings season, which is now coming to a close? Just the degree of new buyback announcements has been insane. And even now, even after companies are through earnings season, I feel like every morning I'm seeing somebody, what was it, Avis this morning announced that they're adding some large amount of number onto their buyback. It literally seems like every single day there are more buybacks being entered into this market. And that just goes back to what I've seen for probably 11 out of 12 years of my trading career, which is a market that has been shrinking, right? The market has been slowly shrinking. And what do I mean by that? There has been more stock taken out of the market through buybacks and through M&A than there has been new stock coming into the market via IPOs and secondary offerings. That's how you get a shrinking market. The exception to that was really last year. Like the only year ever, I feel like, in my career where the market hasn't shrunk was last year. Sorry, I got distracted by a Slack message. All the SPAC issuance, all the IPO issuance, everyone taking advantage of the fact that valuations were ridiculous to be able to come public, really created a market expansion last year that we hadn't seen in a while. And again, why is this important? These are the market dynamics about supply and demand. Apple, I've got a little conversation on my Derrick the Trader YouTube there, which everybody should check out, where I talk about why I love being long stocks that are buying back their own stock because they're on their own bid. But I don't remember the numbers off the top of my hand. I think I quote it in that class. But Warren Buffett's Apple position, he accumulated whatever he accumulated percentage-wise of the company. And then it was a couple years later, it was like he had a whole extra percentage point of the company. Why? Because the company was buying back their own shares, so reducing that flow. And that's what Stefan was actually talking about with Oxy, which was one of our trades of the day today. I'll review it in a second. Is that between Warren Buffett soaking up all that stock and Oxy also having a buyback, all of a sudden there's a much smaller tradable float for Oxy. So forget for a second about the fact that everybody loves to follow Warren Buffett. So when he announces a new company that he buys, a lot of people come in and follow it. Just think about the fact from a supply and demand perspective. all the stock that Warren just bought, plus Occidental Petroleum is buying back their own stock. That just means that if you and I want stock, there's less shares out there. Supply and demand, price goes higher. So that is, really what a lot of that comes to. So anyway, great day for the market today. Great day for the team today. Do we have confirmation on the NASDAQ? Not really. I've been saying that triple Q 350 is where we would go from bearish to neutral. So we're not even with this strong rally over the course of the last 3 days in the NASDAQ. The Qs are still not even to neutral territory. They're still broadly in bearish territory, yet they're extended to the upside. And the IWM, honestly, the IWM is in neutral territory, borderlining on bullish. If the IWM starts really giving us a close above like 207, then it's showing a degree of trend reversal here, which would be interesting. So going back to time frame continuity, which we said is one of our important layers of probability. Time frame continuity is really more about trend analysis, but it's the same concept here when I'm analyzing these three indices. Do the SPYs, Qs, and IWM all tell me the same thing? If the answer is yes, then I'm going to have a higher probability trading in the direction of what the indices are telling me, right? And that also goes back to our layer of probability, which is the market. And I would say that we do not have confirmation here across all of our indices. The IWM is neutral, bordering on bullish. The SPYs are just into the neutral territory, so kind of almost bordering on bearish. And the Qs are still in the bearish territory, but bordering on neutral. So we want to pay attention to that as it continues to progress. As far as individual stocks today, once again, big shout out to the team. Trading ideas from the morning meeting today were just on point. We talked about where the market was opening today as possibly being a little bit of a coin flip, and that coin flip obviously clearly resolved to the upside. But we wanted to focus on things that were potentially in play or things that had relative strength. So the big conversation in the morning meeting today was really about focusing on things that were more commodity related. We spent time specifically talking about energy stocks in the morning meeting and talking about these gold miner stocks in the morning meeting. And they just all worked out super well. Oxy, probably my, kind of trade of the day in some ways here. I know a bunch of you guys were involved in it with me. The difficulty on Oxy was at the spot that I really wanted to buy, you couldn't get stock intraday. The idea behind Oxy, so first of all, we had oil gapping up 5%. Oxy, we know what's going on here with the company buyback and with Warren Buffett. We discussed all that information already. Oxy here, we're looking for the inside day and up. So pre-market, this thing was trading below yesterday's high, which is 54.94. So my original idea was to buy it through 54.94. And I was able to do that, not with a huge position, but I was able to get stock, pre-market, basically through, there we go, basically through that level, which was where, 54.94, I just said? Yeah, right here. This is yesterday's high, and this is showing yesterday's pre-market action also, so it's actually making my chart look a little bit confusing, but it's actually this green candle right here. You can see that's 9:35 a.m. That was yesterday's high, so that's the high of the inside day. So that actually triggered through it at 7:30, 7:20 a.m. So were you guys logged into the VTF at 7:20 a.m.? You snooze, you lose, I guess. So I announced I was buying some stock there pre-market at that time, and I really wanted to size up during the trading session because it can be good to get some stock sometimes pre-market, but it's also dangerous because liquidity is very low. So you do have to be a little bit careful there. By the time it opened, this thing exploded. It opened up super extended to the upside. Now the gap is so big. The buy that we wanted was 54.94, but stock is opening up $1 above that more or less. Very hard to get stock for this initial momentum move. Gets extended. Gives a shooting star candle. What does this candle represent? This candle represents technical pullback, right? Price correction. Price correction to where? Price correction to the equilibrium area. What happens? Stock pulls back right into the 80 MA, begins to create a pivot point, and that was this was the spot to add. This is a spot that I communicated. I didn't love my price honestly on my ad. Felipe got a better price than me. that rat, always getting better prices than me and then selling in front of me. Anyway, saw this pivot begin to form off of the ADMA here perfectly as it should. So I said to myself, all right, I'm going to take an add-on trade, not an add back. Those are two different things. Add back versus add on. That was just going to be versus this low. And I'm anticipating the potential pivot point to come in. And I was a little nervous about it, actually, because the selling pressure felt a little heavy here. I bought it. I didn't get that immediate gratification, but buy the ticket, take the ride. I already got the risk on. Let me sit on it. And it starts to work. So I was able to cover my risk around 56.50 or so. And then I booked some more profit on the way up here. And then I just held everything else. I didn't really trade it at all actively after that point. I just held everything else because the daily chart looks so good. There's so many things to like about Oxy right now, honestly, that I was like, all right, this is going to be something I want to swing. If it can close well, it closed well, and I'm swinging it. So that turned out to be a really fantastic trade for the team here. And that was the one that I said that I was planning on focusing on. But I know we were talking about Apache a little bit, pre-market. That one worked out really well for people who got it. Rig, we were talking about. That gave good continuation for the people who are involved in it. This TALO that Matt got me involved in yesterday gave me great follow-through with an inside day and up as well. So all those energy stocks worked out really well. And we also spoke about another relatively strong sector, if you even want to call it that, in our market, which is these gold miners. I like trading the miners, I guess, better than I like trading gold. Gold can be very gappy. And you can see actually here the GLD didn't trade that great. But GDX had pretty execution right here. Very similar trade to what we just kind of went over with Oxy. The gap up was pretty big. We talked about just broadly. So this is just so you guys understand how the morning meeting works versus the actual price action during the day. In the morning meeting, all we know is daily charts. We don't know what the intraday chart is going to look like before the market opens. It's always going to be ideal that if you look at a daily chart and you say, okay, this daily chart looks like higher, looks like bullish, looks like pivot low here in a relatively strong sector plus an inside day and up, that's great. That's all the information we have in the morning meeting. So a lot of times the only thing I can talk about in a morning meeting is kind of daily chart entries and daily chart stops. So you'll hear me say a lot like, great to be long GDX possibly versus yesterday's high or even yesterday's low for people who are going to be super big picture. But if possible, we want to be able to find a smaller time frame execution based on the fact that we know this daily chart looks really bullish. Which doesn't mean that you can't buy some stock and give it yesterday's high. I'll do that a lot. A lot of times if you hear me say, oh yeah, I'm buying a feeler. Me buying a feeler will usually mean I'm using like a daily chart stop. So I don't have a lot of stock, but I'm giving it a lot of space risk, which can still mean an okay amount of risk. But, like I've also said, the big money comes from catching big moves on big size. So it's great to be able to have a smaller position versus a big daily stop out. That's fine. But if I want big money, I want to try to be able to find the smaller time frame execution to be able to give me the stock in a better way. And that entry execution was really off this inside 5. And inside 5 candle is what we use for an execution strategy when we like other things, specifically when we like other things. It represents a period of rest. So an inside 5 into a pivot point of the ADMA and a stock that's digesting a gap up that looks really good in the daily chart is a perfect example of one that you can execute. So you could have cheated. You could even bought early versus this pivot. Or the real execution would be to buy the break of the inside 5 here on this candle with your stop loss as the low of the inside bar, or in these types of pivot cases, I actually prefer to use the low of what we call the outside bar, which would be the low of this red candle. So basically you'd be buying at 37.62 with the stop loss at 37.42, 20 cents worth of risk. Gives a really good initial move here. Looks like in the afternoon it kind of rolled over and died out a little bit. AEM, we talked about, was actually being relatively weak off the open, which I didn't love. You had this GDX kind of rip higher right away, whereas AEM was kind of being sloppier and grinding lower. So again, relative strength and relative weakness. This information to me means, even though I was looking at AEM in the morning meeting and it still worked, I feel like I'm going to have a lower probability of success buying AEM compared to the GDX today, again, because of the relative strength, relative weakness layer of probability that we discussed. But this trade, which I know Sebastian and a couple other people were stalking, and I think still caught, still worked out really well. The execution was very similar. This is giving more of a technical pullback to the ADMA, followed by your inside 5 right in there. The inside 5 breaks up, so you could have bought AEM at $60.33 versus a low of $60.03. So you got 30 cents worth of risk here, and it rips through for $2 worth of reward before kind of petering out here into the afternoon. So we'll see how these gold miners play out. I don't love the closing upside tail for GDX or AEM. I definitely don't have the same conviction in the gold stocks as I do in the oil stocks. I broadly have never been a big fan of gold mining stocks, which is interesting because I think my best trade of all of 2020 and maybe the best trade of my career was in JNUG coming out of the COVID crisis. I just caught it was 3x leverage, then they changed it to 2x leverage, but they reverse split this thing. It was like $3 or something. I caught a move from like $3 to like 30 or something. I don't exactly remember. It was this move. I caught this entire move here over the course of these months and really crushed it. So split adjusted, it's $40 to basically almost $200. So that was a good one, but I've never really loved the miners. I've always thought that they've had some business issues, whereas the oil stocks right now are really interesting to me, and we're able to catch that. And then we had Pat with the sick call out intraday on the uranium stocks. We saw, which one was it? One of them came out with bull flow. I don't remember which, but based on that, it was like pretty consistent bull flow. It was UEC. Yeah, so Pat, is this what put them on your radar in that moment? Was you saw the UEC bull flow hit, or perfect? So, guys, this is just a perfect example of why the option flow that we get posted into VTF is such an important piece of information. Again, it's not a trade in and of itself. We don't see option flow hit and just close our eyes and press the buy button. But it is incredibly typical that when we see consistent, strong bull flow or bear flow hit on a stock, that you get a move. And honestly, another thing, and I won't make any conspiracy theories about it, it's also not unusual that we see like big bull flow hit and then the next day the stock comes out with earnings and rips in that direction. Take that for what you want. I'm sure it's a coincidence and people just get lucky. But anyway, Pat sees the UEC bull flow hit on the stock, and this is one of these uranium stocks, right as it's making this bull pennant here, and then you can see the volume come in as it breaks higher, which is right when the bull flow actually hits. And at the same moment as that, all of these uranium stocks looked fantastic. CCJ building out a bullish consolidation here, breaking out on some volume, giving continuation. UUUU, which this came out at this earnings report the other day, and I actually thought the earnings report was like really not very good. But same pattern here. Bull flag, ADMA catches up. The UEC gets the bull flow. They all start breaking. CCJ has been my preferred name in the space. That one broke higher. And what's the ETF symbol? Totally blanking. The URA. Yep, thanks. And URA. This one didn't actually break as hard as some of those stocks, which is interesting. But URA here, kind of similar thing. You see the volume pick up a little bit. It starts to break out of this bull flag. This one actually then gave another tight consolidation before giving follow through to the upside. So all these uranium stocks gave really huge moves. Shout out to Pat for the team call out on it. These names have been on the radar for a while, just with the move in oil and in energy and period. The idea here is that there might be more potential for nuclear energy to come around, and I think that there was also some issues in like Kazakhstan or something, which is a big uranium miner. I think Russia might be a big uranium miner also, which could limit some of that supply, which might be good for these companies in the same way, you know, that less oil supply coming from Russia is good for some of the oil companies. So we'll see. Definitely, these are tricky stocks to trade. A lot of volatility here. They did give this downside tail, which overshot equilibrium, but that's fine. It's still within the confines of trend. And then gave big beastie days today. Yeah, crazy volatility with all this stuff. And that's basically it. There's a couple other things on here, but I don't think we really need to go through every detail of all of them. So just, once again, great strategizing based on our pre-market research, coming into the morning meeting and having good ideas that played out really well. So once again, just the value of a strong team. And with that said, I am happy to answer any questions that you guys have. So I'm going to do what I always do, just scroll back to when the meeting starts at about 10 after 4, and I will just scroll through the virtual trading floor here for questions. The first thing I think I'm seeing is from Justin at 413. With the SPY at 441, do you see an edge in the Qs or the SQQQ? Just so you know, I see an edge with SQQQ. Well, I mean, SQQQ and Qs are basically the same thing. It's just your SQQQ is going to be, the inverse ETF. So they should look the same, just kind of opposites of each other. I just think that and I'm not really sure where your question is kind of directed as far as opportunity. Like, do you mean long or short? If we were to have a big gap up tomorrow, I think we've got to be looking at shorts. If we get a big gap up tomorrow, we're going to be so overextended to the upside into resistance areas that I think that we will have to be looking at shorts off the open into that type of common gap. Unless there's some major crazy news or something that comes out. So I think that is actually going to be a potential opportunity tomorrow based on how we gap. More times than not, the way you want the market to gap for giving you opportunity is not what happens. That's not always true. But, like for example, on the close on this day, we desperately wanted a big gap down because it'd be a sick buying opportunity, and we got it, and it was just like the best trade ever. That's like almost the opposite tomorrow. After 3 huge up days in a row, if we could get a big gap up tomorrow, we could gap up to 346.50 or something like that tomorrow. You sell, at least for a short-term pullback. So we'll see how that plays out. Scrolling down here, reading a lot of dog chatter. From Ricky, today is only the 7th time NASDAQ followed a 52-week low with 3 straight 1% plus rallies. The last one was at the diamond bottom in February 2016. I remember that. Good stat there, Ricky. Thank you for that. From Greg D. How do you think the rolling of contracts tomorrow will affect general trend? Looking at options expiring tomorrow, there are enormous amounts of put premiums expiring. Yeah, that's what Pat's note was talking about yesterday morning. So definitely check that out from yesterday morning if you didn't read it already. So, like I said on one of the other morning meetings this week, we saw very consistently in 2021 where it was the opposite, where there was a lot of calls that were going to be expiring and the market was so bullish that it was into each options expiration. Where's 2021? It was basically into mid-month every month, which is when your expiration is. We had downticks in the market, like super consistently. There's even a small one here in November, just super consistently. The question is if that's been front run or not, because what we were seeing in 2021 is, if you know the information, I know the information, and Pat knows the information, we like to think that we're pretty bright people here in the pro desk, but we're not the only people with this information. We're not the smartest people that are out there necessarily, right? Everyone else knows that information too. So if they know that information, there is a chance that the market's front running it. and there's also that information about rebalancing into the end of the quarter. I'll tell you, there's already going to be less rebalancing into equities based off of this move, right? Because the equities that people currently have in those funds are worth more, so they don't need to rebalance as heavily as they would have if we were at lows. So some of that's already being front run. The question is how much? I don't know. What we saw on a lot of those other months where we dipped into the options expiration is literally like that next Monday once we got the options expiration was the pivot and we were going back up. So could it be, again, a market dynamic situation? This is why this stuff is so important, where maybe we get a decent day again tomorrow, or maybe we just get a consolidation tomorrow because we're so extended, and then that's our pivot high and we start rolling all the way back down next week. It easily could be that way because they're front running it. So we'll see. It's quad witching tomorrow. Quad witching happens 4 times a year. It's one of my least favorite trading sessions. I tend to do much less as far as trading activity as a general rule on quad witching because the market close is always so wacky on that day. What those stocks do, just start ripping and dive in like totally out of nowhere with almost no rhyme or reason to it because they want to get these contracts to expire in favor of the banks. From Sebastian, what grade would I give BTU and Nugget today? Yeah, so BTU was a great opening call out that Josh had. I feel bad because Josh was asking me about buying off of this low, and I kind of said I didn't like it, and it did give a decent move off of that. But I can tell you why I didn't like it. When a stock gives an opening momentum move, whether it's to the upside or the downside, in this case to the upside, if a stock gives an opening momentum move and then has a retracement that's in excess of 100% of that opening move after equilibrium is caught up to it, the odds of a new high become very low probability. So Josh called this out. Hey, what do you think about rebuying BTU here versus this low? And the reason why I said I didn't love it is because if I think it's a very low probability that you can get a new high, it inherently means that the trade is going to be reward limiting. So that makes me not love that as much. And kind of we were both right at the same time. You didn't get a new high, which is a very low probability thing when you get that 100% plus retracement. But you got a big enough of a move where you easily could have paid yourself. And Josh was talking about buying this thing like right here. He probably would have had like 10, 13 cents worth of risk, and off of that got a move up to got a $1.40 move or whatever. It's that's still a 10x risk reward. But it's just I'm a rules based trader. And pretty much one of my rules is got 100% retracement of a momentum move after equilibrium caught up. It's not a stock I want to be long that day. So it goes off my radar. So I kind of feel like we were both right at the same time off that. I'm not answering your question, though. Your question was, how would I rate the trade? So the initial trade that Josh brought to the table in the morning meeting, and it's another energy name. They're more coal-focused. Was an inside and up. Again, relative strength. $20 is a big level, and it's gone below $20 here a couple times, but it's never really closed below. I guess it did by a little bit on this day. And it's not just important whether a stock trades above or below a level. It's also important whether or not stock actually closes above or below the level. It never actually closed below the level of $20. So this is really all kind of intact, even if this pullback was a little bit more than you would like it. So you got this okay, healthy pullback where it's retesting more or less the $20 area that it broke out from, and it's looking to pivot back up, and it's giving an inside day yesterday. So it is in a lot of ways a similar setup to what we had in Oxy, what we had in GDX. So the idea here was a trade through 2110, which is yesterday's high. I believe it opened above 2110. Is that accurate? It did. It opened at 2111. The low is 2111. Technically, you could have taken this trade with 2 cents risk. I'm not going to do that because you're probably getting shaken out. But you literally could have bought this thing and it would have been technically correct to have bought this thing the second the market opened, and you would have had 2 cents risk, because at this point it's breaking them above, which kind of makes it more of a breakaway gap. So you would use yesterday's high as a stop loss as opposed to trading through yesterday's high, which you buying it through yesterday's high with an intraday stop loss at the previous pivot or at the low of the day, or kind of something like that. So if you were on point and you executed this really early, the question really is the stop loss, though, because it would have been technically correct to just use 2109 as your stop, a penny below yesterday's high. That's tough, though, because the ADMA hadn't caught up yet. There's a probability you're getting shaken out. So knowing myself, I would have bought less stock and probably been giving it like some gap fill room or a pre-market low or something like that as an initial stop. But again, broadly, to answer your question, I would rate this trade pretty highly. You've got the market on your side. Well, we didn't know you were going to have the market on your side, but there's a chance you would have market on your side, and we did get market on your side. You got relative strength. You got the kind of the sector energy that we're thinking is going to be in play today, based on USO gapping up. You got volume confirmation really early. Volume, first 3-4 bars here is fantastic on it, and then it begins to die out a little bit. I don't think I would rate it as an A+ trade, but it's definitely like a solid B+, A- type of thing. And then the other one that you're asking me about is Nugget, which is the 2X gold miner ETF. So instead of trading GDX, if you're a little crazy and you want to trade the leveraged GDX instead, you can go to this Nugget, which is like similar to the JNUG, but it's the gold miner majors. Gold miner majors. I mean, like mining, like you're mining, but majors, like the big leagues, as opposed to JNUG, which is junior miners. Yeah, so I mean, similar trade here. The problem again is the gap being really big. So whereas you've got a pretty good probability of success, there's a lot of things to like about this. Maybe the risk reward here is going to take away the grading of the trade a little bit, because you're having to pay up so much. If you're looking to buy versus yesterday's high on this thing, how much risk are you taking? Taking $1 risk on a $67 ETF, but it's a leveraged ETF, so it can certainly move. It's not terrible. You can definitely pay up that amount, but it might be a little bit too much to, it might be enough where if you're giving it to yesterday's high, where it would actually disqualify it from being an A+ trade. This is also a really nice setup in here, though. But these intraday executions at this point, I also wouldn't consider to be like an A+ trade. And you don't have really good consistent volume that's kind of coming in. So this is, probably a solid B, something like that. There's Diego, our miner expert. So probably a solid B-type trade here. Especially in that inside 5 and up for GDX or Nugget. Thank you for the question, Sebastian. Somehow I lost my spot here on the VTF, so now I gotta scroll back up. There we are. Does a shrinking market mean less liquidity? Not necessarily less liquidity. Not necessarily less liquidity. It just means less stock available for people to actually purchase. So again, it's just a supply and demand situation. The more, if the same amount of people want to own a company, but that company has less shares, it inherently makes the price of the stock higher. It also helps to inflate, certain fundamental metrics like, EPS and PE ratios and things like that. From Gavin, the shrinking of the market partly has to do with baby boomers who have been liquidating their retirement accounts over time. I'm not sure about that. I'm not sure about that, to be honest. It's not technically, it's definitely not technically shrinking the market. The question is, baby boomers liquidating their portfolio, what does that do to just general supply and demand if they're constantly selling, which technically would make the market weaker. People have been talking about that concept for a while now, but I'm yet to actually see any real data that backs it and proves it. That baby boomers who are going into retirement, cycling out of stocks which are more volatile. It's actually a conversation I've been having with my own dad recently about his portfolio, which has been 100% in stocks to my surprise about kind of what he should do about it. Luckily, it's mainly been safer type companies, your Procter and Gambles and your Berkshires and things like that, and at least he's not fully invested his retirement account into Tilray. About kind of what he should do from a risk reward perspective, because it's hard to be a bond owner right now too, to be totally honest with you. The 60-40 portfolio or whatever is definitely a little bit of a struggle right now as interest rates are increasing from the Fed. So yeah, definitely want to see some more data to back that up. This baby boomer generation outweighs in numbers compared to younger generations, to where we are probably going to see a market shrinkage for the next 20 years or so, give or take. Yeah, but you also have, in a way that's probably never been this way before, auto investing in like retirement accounts to this degree. And like I know it's existed for a long time, but now everybody who's in their 20s or 30s is kind of starting a 401k or an IRA or something like that, and they're having automatic money kind of going into it. I don't know if the baby boomer generation, when they were in their 20s or 30s, had the same auto allocation of stock coming in that could be helping to balance that. I'm really not sure. I think 50% of them move into stock on average is to be the market index. Is this true? I don't know, Justin. I've never heard that statistic before. It wouldn't surprise me, though. Going back to our layers of probability, we know how important that is. And I'm sure it's highly dependent on the specifics of the stock. And it also depends on whether or not the stock is actually in an index or not, and what index it's in. A lot of those growth stocks that are down 90% are not in any index. Otherwise, those indexes would be even more destroyed than they already are. Like if you look at the average ARC type growth stock that had a bubble in late 2020 to early 2021 and is down 70, 80, 90%, oh my God. If you just saw, like in a vacuum, that series of stocks, you would think that's the Great Depression. But it's not, because your value names have been holding up, and there's still been money rotation, and the big tech stocks haven't been too bad, except for Facebook and Netflix obviously have been pretty bad. From Bruce Selby, please explain the difference between time and price extensions. Okay. The extension is the same thing. It's how the extension is corrected, right? So what is extension? Extension happens to various degrees, right? And you can have things that are more extended, less extended, and you can have things that are heavily extended become even more extended. But basically, anytime you see any stock, because you still have Nugget up right now, that has moved away from its equilibrium area, as represented by the space between the 8 and 21 EMA, it's extended. It might only be extended by 2 cents, but it's extended. Or maybe it's extended by $2, in which case it's significantly more extended. And obviously when you're talking about cents and dollars, you're probably better off talking about percents, right? You could have something that's just sitting a little bit above that 8 EMA, so it's extended by 0.2%, or you can see a stock that's extended away from its equilibrium zone by 10%, right? So you have degrees of extension. The first key principle about a stock that is extended is that it can always become even more extended. And this is especially true when there is momentum, right? Momentum is what creates extension. So this is especially true when there is volume. Volume is a characteristic of momentum. So the reason why I always want to say that is because you can never look at a stock or a market that's extended and just say, oh, it's extended, it has to go down, so let me short. Because that thing could just get more extended and more extended and more extended and more extended before the correction actually occurs, and then you're just totally destroyed. And again, especially true when there's volume or there's news. But eventually, markets will need to correct. There are 2 ways in which a market can correct. It can correct through time or through price. A price correction is when the stock moves back down to the equilibrium area. So right here at the beginning of the day in Nugget, this is an example of a price correction. The stock is trading at $69.21. The ADMA is all the way down here at $66.73. So this ETF is really what it is extended by about $2 to the upside. And what does it do? It pulls all the way back. It pulls back as the moving average rises. It doesn't even fully clip it. It just gets to pretty close though, which shows you how strong the ETF was at this time, that it doesn't even actually clip the ADMA before pivoting and extending again. But that's the example of a price correction, is a technical pullback to equilibrium. Right here is an example of a time correction. Market's extended a little bit again. Stock's at 69.77 at highs with the ADMA at 68, 67. So we are extended by $1 at highs right here from the ADMA, from the upper band of equilibrium, even more to the lower band of equilibrium. So we are extended by $1 to the upper band of equilibrium, and then what do? We go sideways for 1, 2, 3, 4, 5 5-minute bars for 25 minutes. And what happens? The 8 EMA catches up to it, right? These are moving averages. It's a price that is representation of the average price over the amount of periods. So in this case, it's an exponential moving average, which means that it weights more recent bars heavier than it weights earlier bars. Simple moving averages weight all bars the same. But it's an 8 EMA, so it's representative of the last 8 bars. So once this catches up here, after these 5 bars worth of rest, it's no longer extended. So this is an example of a time correction. Price correction, stock satisfies extension by moving back down, price correcting. Time extension, stock satisfies the extension by moving sideways so that equilibrium can catch up to it. So that's that. From Mike here, please explain why you bought Oxy at 10 a.m. while it was still going down. I didn't buy it while it was going down. I bought it while it was going up. Very important. I did not buy it on the way down. I bought it on the way up. I bought it after it made this low. It made this low here at 58.80, and I bought, I think, 56.20 on the way up. I took on about 40 cents worth of risk. Unlike Felipe, who snuck in and probably bought like 56.04 or something like that with 24 cents of risk. I had 40 cents worth of risk. One day I'll be as good as Felipe. Yep. All right, scrolling through here on the VTF looking for next questions. Josh posting that the United States says Putin is likely to make nuclear threats if war drags. Just another reason for me to avoid going back to New York. Gavin says I should look up hidden secrets of money. Okay, try to check it out. Andrew, what about a stop on the trade in Oxy, assuming that was your first entry for the day? The pre-market entry, Andrew, or this entry? This entry was a simple trade off the pivot. The pre-market entry was a smaller position. It was a feeler because I had to give it room. I was giving Oxy all the way down to yesterday's low on my initial buy. That was my plan. So I bought, like around $55, and I was going to give it all the way down to $52.90. So about $2 worth of risk or so is what I was taking on my initial buy there. Which is a lot of space, which is why I couldn't do it with huge size, which is why I wanted to get heavier, which is why I'm glad that it gave me that pivot point. Yeah, Ray Dalio is definitely someone you can learn a lot from. I've never read any of his books, but I've listened to him on multiple podcasts. Actually, that's not true. I think I might have read part of, not all of it maybe, part of Principles or something. I honestly don't remember. Thanks, Paul. Z, I hope I answered your question because I think I answered Andrew's question. From Jen here, Jen.C. Any comments on AMD? Was AMD that relatively weak today? I didn't see that. I didn't notice that till right now. I don't like that AMD was so relatively weak. NVIDIA was green. Soxel is green. Micron is green. AMD is red. Why is AMD red today? I think we saw some bull flow hit on it. I don't know why AMD is red today. That'd be the first thing I would say. It's relative weakness, right? Relative weakness in the sector of semiconductors. Notable relative weakness. That means just purely based off of today, and it could just be a one-day anomaly, purely based off today, this is not the semiconductor I want to own. Though broadly, it's been the semiconductor I wanted to own off this $100 level. I don't like that relative weakness. Micron's actually been one of the best, though this pullback, the market really kind of got to it. Micron's been a really strong one. Micron still looks really good. It was nice and green again today. The SOXL is a good ETF that represents all of it, into the 21 EMA here. I don't like AMD's action today. I don't like that it was relatively weak. Is it even an inside day? Did it break yesterday's low? Wow, it's not even. You don't even have an inside day set up off of this. You can't believe this thing broke yesterday's low. I'm glad I didn't trade AMD today. I would have been super frustrated just watching everything go up and kind of being stuck in this thing that's just not participating. It would have been super frustrating. You don't even have an inside day to try to buy it through for tomorrow. Not sure, Jen. Big picture here, as long as it's holding up above $100, it's okay. You gotta like the fact that it kind of broke this descending channel here a little bit. That looks pretty good. Maybe I'm overanalyzing relative weakness because it's just one trading session, but definitely don't like that relative weakness today, so I would be cautious. Uranium place we spoke about, IDOC, so I hope I answered your question there, unless you have anything more specific. From Justin, I put the 8 and 21 EMA on a 1-minute chart of 1 minute for swim. I really don't like 1-minute charts, but okay, swim. I see many times I can buy and sell the same stock, and it makes between 50 cents to $2. Is this type of buying and selling profitable? Does any other people at T3 Trading Group do this type of trading with a buying power of 200K? I don't like a couple of things that you're saying here, to be totally honest with you. First of all, I really don't like 1-minute charts. I think the time frame is too small. 5-minute charts can't even last for an entire day. So why would 1-minute charts be able to last for a significant period of time? The trend is going to end up breaking. And most likely if you found it and swim, I can't even pull up a 1-minute chart. I literally don't even have access to one. I do have access to a 2-minute chart, which I can kind of look at. And honestly, it looks super, super sloppy. Yeah, I really don't like the 1-minute chart. I think that the time frame is too small, and I don't think that you can just buy a stock because it's touching its equilibrium area, the space between the 8 and 21 EMA, because they can overshoot it. Sometimes you get a pivot point that's above the 8 EMA, sometimes you get it at and this is assuming that the trend even continues. You sometimes get a pivot that's above the 8 EMA, at the 8 EMA, between the 8 and 21 EMA, at the 21 EMA. Sometimes we've seen a couple charts like this on daily charts already today in this afternoon meeting. You overshoot the 21 EMA, and then you get your pivot point, and the stock is still fine and healthy. The problem is, if you just randomly start buying the second it touches the 8 EMA because you're expecting a pivot, and this is the time when it overshoots and breaks the 21 EMA and the pivots and goes, can you afford that risk? And that's assuming it doesn't even just fully reverse, which will happen sometimes, even if it's lower probability. So I don't like it. I will look to the equilibrium zone, like we did with Oxy today, to see if the stock is forming a pivot. But for the most part, and Oxy is actually not a great example of this, there's a couple specific things I want to see that a pivot's being formed. I want to see what we call a continuation hammer into or off of that equilibrium zone, or an inside 5 where you have like a negative Mariposa that brings you down to the equilibrium zone followed by an inside 5. The inside 5 breaks up and you can use that as an execution strategy for trend continuation. So I want to be buying on the way up, right? Someone asked me if I bought Oxy on the way down. I did not buy Oxy on the way down. I bought Oxy on the way up. I want to be buying on the way up after I have a signal that's telling me most likely what I'm looking at is the pivot and it just came into the right spot. And I can buy it on the way up and I can have good confidence. Cool. Scrolling through here. Interesting to see some of his recent videos. Not sure who you're referring to. I might be talking about Dalio. I think you're talking about. I think you're talking about Dalio, Greg Dean. Your comment, but I'm not sure. So I'm gonna keep scrolling through here, looking for questions. Did I go over Yak's game plan? I did. We'll redirect you to rewatch the afternoon meeting if you missed it on the Derrick the Trader YouTube. It'll be on there. All right. I'm seeing a lot of comments. I'm trying to pick out the questions. I think I see a question here coming in from Marsh. What are some books you recommend as must-reads? My favorite book on proprietary trading is One Good Trade by Mike Bellafiore. A must-read for sure is Reminiscence of a Stock Operator. My favorite book on technical analysis is Technical Analysis on Multiple Timeframes by Brian Shannon. Trading in the Zone is a classic on kind of market psychology. I think that's a good initial list for you. Scrolling through here, through the chatter. Yeah, Diego giving a comment on boomers where they're going to go with their retirement money, and that's exactly the situation, right? You can't buy bonds right now. So where are you kind of going to be? You know, safety stocks I think are a good spot broadly, but I'm ways away from retirement still. I think mainly because I love trading so much. Greg D here. I guess with firms like Robinhood and Webull, it must replace some of the liquidity leaving. I mean, I don't know. You know, there's always people out there trading. You know, maybe that brought to the masses. You know, what we definitely do have is a higher number, and I'm curious to see if this has come down again after the destruction in the growth stocks. But for sure, we had a higher percentage of retail involvement in the market than we've probably had for any point in time. Like if you look at like the Chinese market versus the U.S. market, the U.S. market is dominated by institutions, and it's a much smaller percentage. I've read the percentages. I don't remember what they are off the top of my head. It's a significantly smaller percentage of the U.S. equity market is made up of retail, whereas like the Chinese market's the opposite. It's a significantly larger percentage that's actually retail money involved in that market over there as opposed to institutional money. Generally, retail money tends to be more emotional than institutional money. U.S. has the most liquidity and largest markets, easy access globally. Hong Kong, Germany maybe trades 20 to 30 billion in a day. The SPY alone averages $40 billion a day. Yep. It's also interesting to see the statistics of how people, based on whatever country they live in, tend to be overly invested in the country that they live in. Not sure on your question, Gabriel, about the rebalancing with the baby boomers. It's not something I've really done too much research in. Scrolling through the VTF. Looking for questions. Josh saying that learning about price and time corrections will literally make you a better trader immediately. James saying that the boomer money will still be there, handed down to the next generation. Yeah, I agree with that. I'm a boomer, more active in the markets now than the 70s when I bought first stock and options right after they started trading options. Awesome, James. Glad to have you in here. Gavin giving me a couple stocks to look at. BXRX. Looks very thin. Ugh, I don't know what this is. BXRX, Bowdex Bio. I have no opinion on this one for you. I can tell you that right away. I tend to stay away from biotechs kind of as a rule. I hate the liquidity on this thing. I can already tell you that as well. Gaps in the 5-minute chart are like a no-go for me. I really dislike stocks that trade as $1 also. They're just not worth it for me to be involved in it. I know nothing about the company. If maybe there's a drug trial out there and it opens up at $8 tomorrow, I got no idea. So I really can't give you any feedback on that one. VIR is also a biotech company. And again, I don't love biotech companies. Liquidity is better than the other one, but still a little bit low. Technicals here look okay, rounded up into the 21 EMA, I guess. It's still on a broad downtrend. But yeah, not something I would want to be involved in. It's always the biotech that gaps up 400% or gaps down 95%. And as much as I would love to be in a stock that gaps up 400%, I don't want to ruin my career by having a stock gap down 90% on me. So I know nothing about this Vera Biotech. Technicals don't look great. Liquidity is okay, I think. EPAM Systems, not familiar with the name. This is a super damning Maribozu. You need this stock to negate the negative Maribozu to start looking better. Little roundup bounce here, but this easily could just be the next lower high that's coming in. You need the stock to get above 355.76. Start looking better. I don't know if that was an earnings report or what, but I don't think any of those charts are looking particularly bullish. What do I think about the 1 hour 20-day chart? So I look at hourly charts for sure. I look at hourly charts, and I look at daily charts. What I look at most is a daily chart in conjunction with a 5 and 15. Scrolling through comments, looking for questions. From Greg D. Coming in as a new prop trader, is the firm supporting using complex option strategies with a mean of proper risk management? Yep, complex option strategies are going to be okay. Literally the only thing from a strategy perspective that T3 Trading Group does not allow for, with either its prop or retail accounts, is naked option selling, particularly on the call side. That's it. But complex strategies, anything that's hedged, any selling that's going to be hedged on the option side is always going to be fine. Yep, How to Trade Stocks by Jesse Livermore. Solid. What is the yellow line? Yellow line's a 200 simple moving average. Ignore it on 5 and 15 minute charts. I keep it on there specifically for when I switch over to dailies. The daily charts when I want to see the 200 SMA. Gabriel saying Square is looking good. Totally agree. Square had a monster day today. Almost back up to the post-earnings high after a great earnings report. I think the only reason that this stock pulled back as much as it did was because of broader market weakness. We have a handful of these stocks that we've been paying attention to that had really good earnings reports, but then the market brought them down. Upstart's another one. I know Shiev has been all over this Upstart from 2 trading days ago. I think this Upstart could definitely be back at its post-earnings resistance of 160. So we will see how that one plays out. You guys are starting to wear me out. Justin, I use 65-minute candles, 390 minutes in a day. So 665 minutes. Yep, I totally get it. No, it's not wrong. That's fine. I use the 1 hour just because it's how my system's set up already. The problem with the 1 hour is that you get one candle every day that's actually a 30-minute candle. So yeah, what do you look for in the 15-minute and hourly charts? Hourly charts I generally look for just confirmation and information. I don't really execute off hourly charts. I just look for confirmation. 15-minute charts I'll execute off of. And you hear me talk about, once we come to like 10:15, 10:30 in the morning, your 15-minute charts become significantly more important than the 5-minute charts. So that's when I'm really paying attention to them. And that doesn't mean I don't still pay attention to 5-minute charts midday also. I do. I just, the 15-minute chart from an execution perspective and a trend perspective is the most important chart, I think, for midday price action. Thoughts on Roblox? I like Roblox. We just needed a technical signal on it. I think I called out along on this thing a couple days ago also, somewhere in here. Finally maybe breaking its descending trend line. Still is below the 21 EMA. This thing could easily get back to $60. Roblox is my favorite metaverse play. If you want a metaverse play, I like Roblox. I don't like Facebook as a metaverse play. I hate that Facebook changed its name to Meta. It's the stupidest thing ever. It's a total desperation move. Our regular business isn't doing really well. We'll recall ourselves Meta so that we can try to say that we're the leader in the metaverse. Yeah, here's Zuckerberg. Though there's definitely an argument to be made that Facebook's trading at almost like deep value territory. You know, they still have a really strong business model. Just got to keep addicting kids to social media and ruining their mental health for profit. Anyway, I'm starting to get cynical, so it probably means it's time to end the afternoon meeting. It has been a long week. So do you sell if the price goes below the 80 MA on the 15-minute chart? No. Moving averages are not support and resistance. They're tools. And I'm very much against like having stop losses on moving averages. It's just a squiggly line. Just a squiggly line that's telling you an average of over the last last however many bars. So no, I do not sell. If anything, if I've got no uptrending stock and it pulls below the 80 MA, I'm looking for that to pivot back up so I can buy, not get out. I'm actually not sure the answer to that question, Josh. Unity is a killer. Yeah. Unity is also one that I do kind of pay attention to in the space. I actually think we called out. I might have called it out on this one. Should admit I'm wrong. I definitely called out Unity recently as a buy off one of the. It might have been off this one. I don't remember. But Unity really came on my radar also recently. Good stuff, James. All right, everybody. I'm gonna end it. It's St. Patrick's Day. Happy St. Patrick's Day. I'm going to get myself a beer before I start responding to the emails that I got to get back to. So if I get a couple misspellings in there, you know why. Happy St. Patrick's Day to everybody. Once again, awesome job for the team today. We're just super on point with our messages here in the morning meeting, our strategy, our execution during the day. Really hope that if you're a guest this week, that you're learning, first and foremost. That's what I really care about. I really hope that people are learning how markets work and that it's going to make you a better, more well-educated trader or investor. And I also do hope that everyone is seeing the value of the professional trading community that I'm getting to work with here. And, again, just being a part of the VTF for 5 days is not enough to get you to learn. I think Robert wouldn't mind me using him as an example. Probably took him, really 6-8 months of being with the team for things to really start clicking for him. And now, he's starting to become a leader around here soon, is what it's seeming like. So, definitely recommend that you reach out to the wonderful, amazing T3 Live trader counselors. I think you're supposed to say, trading or something like that in the email, and then they hook you up with something. I don't know. Definitely also give that Derrick the Trader YouTube a subscribe. And if you are interested in applying to see if you could become a professional prop trader with T3 Trading Group, you can shoot an email to me directly, to Josh, to Colin, to Pat, or you can email info@t3trading.com. Have a great night, everybody. See ya.